next step is to create the statement of changes in owner's equity. Now it's really important that you know that this number right here is what we are going to use on our statement of changes in owner's equity. So you created your income statement so you could figure out if you had net income or net loss. From here we'll go to the statement of changes in owner's equity. This one I'm not going to be very, I don't care if you don't put it correctly in the format that it needs to go. The point for me for the statement of changes in owner's equity is that you can go from beginning capital and get to your ending capital. I need to know what ending capital is, okay? So, using the income statement for Chickadee Travel Service shown in the previous example, prepare a statement of owner's equity for the year ended April 30th. Adam, the owner, invested an additional $50,000 in the business, so from the beginning capital amount, and we had all year, we did transactions all year, and within that year he invested $50,000, and he also withdrew $30,000. Plus, we know that he had net income of $55,550. So the point of this next one is to figure out what is ending capital. So basically it looks like this: beginning capital plus your investments plus net income if you had any, which we did, minus the withdrawals, minus a net loss. We didn't have that. We had net income, is going to give you your ending capital. So if we take all of those numbers, we'll put them on our statement of changes in owner's equity. So this is always going to be who, what, when. Okay? So the first thing is who, and that's going to be Chickadee Travel Service. So if you do have to pause so that you can write things down, go ahead and pause the video. But who, what, when? Chickadee Travel Service. What are we creating? I sometimes say statement of changes in owner's equity or statement of owner's equity. If you want to abbreviate SOE, that's fine. It's for the year ended, so it was from May 1st to April 30th, what we did within that period. Okay? So here are your headings. We'll start with beginning capital. We will add investments. And if you want to put a plus there so you know, oh, I forgot. If you want to put a plus there, you have to put an apostrophe first, so it takes it as a label, not as like a formula or something. And then I'll put the plus, so I have to put the apostrophe first, and then the plus stays. Apostrophe plus net income, since I know I had net income, minus your withdrawals. And I didn't have net loss. I think I have everything. So what am I doing? I'm trying to calculate my ending capital as of April 30th. I should probably come back up here. I can do an F2 or double click and put that this started May 1st. So if you go back and read the problem, you will see that beginning capital was $80,000. And remember, these are like subtotals. We could actually figure out these two increases and put the total increase over here. This one, I don't care that you put everything over here. So the investments, they did tell us, was $50,000 net income from our income statement. So where am I getting that? This number needs to go here. Okay? Write it in your notes. You're going to forget. Okay? And then the withdrawals was, what did they say? $30,000. All right, so equals my beginning plus my investments plus my net income minus what the owner took out. Ending capital is $155,550. And I want to just put a comma on there. Where is my, we'll just do a number and no decimals. All right. From here, we're going to use this number to calculate our balance sheet numbers. So, what colors did I use on here? I had to do all that work, calculate ending capital, so I can use this number on our balance sheet. So I do need a few columns for that, so I'm going to actually put that one up here. So let me go back. For the balance sheet, that is the accounting equation. So if you think of accounting equation is a balance sheet equation, assets equals liabilities plus owner's equity. So we're going to use the following data for Chickadee Travel Service as well as the statement of owner's equity from the previous example and prepare a balance sheet as of April 30th. Okay, so I have to figure out what accounts are assets, what are liabilities, and owner's equity is capital. I don't care, I already calculated that. So I have to figure out, are these assets or are these liabilities? So maybe I will insert an extra column, and accounts receivable is an asset, accounts payable, liability, cash and bank, asset, land, asset, and supplies, asset. Okay, so let's go ahead and prepare our balance sheet. So you still need to do who, what, when. Chickadee Travel Service, it's a balance sheet. This is like taking a picture. On this date, this is what is the ending balance in each of these accounts. So we're not looking at a range, we're not looking from May until April. It's as of April 30th, you had this much in your cash and bank. You owe this much to your creditors. So you only put the date, April 30th. And obviously you put the years, but if you want to use this year, you want to use the year that's in the book, I really don't care. Okay, so now we have to go ahead and list our assets. So the balance sheet is the accounting equation. The balance sheet equation is the accounting equation. So assets, go ahead and list them. They must equal your liabilities plus your owner's equity. So we've got cash, we've got accounts receivable, supplies, and land. Okay, I should tell you, if we come back here, after we decided that all of them but accounts payable were our asset accounts, you have to put these in order of liquidity. You might want to write that down. Which of these is the most liquid? And when I say liquid, think of a liquidation sale. Liquidation sale, you want to liquidate all of your assets, convert them into cash. So our most liquid asset, and you'll be tested on this, is cash. From cash, what's our next most liquid? Well, hopefully that would be your accounts receivable. Hopefully your customers would give you your money. Which one's a little bit easier to sell? Probably your pens, paper, all that good stuff. You could sell that to your employees. So that is more liquid than your land. The land, the equipment, those are property, plants, and equipment. So these are like your current assets, which ones will be used up within the year, and then land, equipment, buildings, those are your property, plants, and equipments, kind of not like long-term, but you have them you use them for more than one accounting period. So, assets need to be listed in order of liquidity. Go ahead and put in your numbers. So you've got all of your assets. Give me your total assets. We do need to start using our rule. So a single rule is just a single line. So I can do this with the borders, and I want to put it underneath this because that means, hey, I'm going to do something with the numbers above. These numbers, I'm going to add them. Maybe it means you're going to subtract them, but in this case I'm going to add them. And then I'm going to put the answer here. This will be a little tricky because I'm done with my total assets. I'm not going to do anything else to it, so I do have to change this to a double line. and put that at the bottom of this. So hey, I'm done with that number. I am not going to use it anymore, and I probably should have showed you how to do that on the income statement and the statement of changes in owner's equity, so we'll probably go back and do that in a second. Now we have to go ahead and list our liabilities, but let me go ahead and center that first. All right, liabilities. So the next thing you have to do is calculate your total liabilities. Since there's only one, we only have to put it over here. If you had, oops, that's accounts payable. If you had more than one liability, then you would list them and put them in the first column and then put your grand total over here. But since we only have one, we're good. And then your ending capital, you do not put your beginning, you put your ending capital. So this number goes here. Okay, so owner's equity, only one account, that's your capital. Everything else has been dumped into it. Liabilities plus owner's equity gives me $167,750. My assets must equal my liabilities plus my owner's equity. Now I'm done, so I do have to put a single line. So let me change mine to a single line underneath the $155,550, and then I'm going to double line because I'm done with that number under total liabilities and owner's equity. So these two numbers should equal. So I'm just going to step back here because I forgot to show you how to do that over here. The single line should be here since we're doing something with these numbers. We're adding them up. So I do need the single line. And then these two, I'm going to do something with them, so I do need a single line. And then I'm finally done. I'm not going to do anything else with net income. I'm not going to add to it or subtract underneath it. I'm done. We're good. So I'm going to double line under the $55,550. Okay, so same thing here. We're going to put a single line under the $30,000 and double line under the $155,550 because I am done with that number.